You alright, guys? Sorry, I just needed to sign in to the Twitch account so we can get this stream up and going over on that side. So welcome to the live stream, the live training session, the full market update, whatever you want to call it. Welcome. So we'll start off by going over a full breakdown as to what we got yesterday. I don't know why. Bear with me. This should be full screen. Give me 2 seconds. Let me just sort out the actual screen on here. So should be. Let me have a look if it's all looking okay. Give me 2 seconds. So here we go. Okay, this is gonna have to do for now. Let me just check. Should be a bit better. Should be a bit larger now. Okay, beautiful. Right. So update. As you can see, this is where we left the TA from yesterday's live stream. We got a nice rebound off this level here, the 0.5, as well as that 200 moving average on the hourly. Huge push up. Blew through all take profits. So what we'll do is we'll restart it. We'll go through the TA that is currently on here. Take all of this off. As well as to the group. 2 seconds. Here we go. Bam, bam, bam. Happy days. Again, guys, I do apologize for how slow things are. We're just going to have to move with it. That's it. Okay, yeah, so we got a rebound. Perfectly tested. Explosion up overnight. Whole load of data to come out today. So bear that in mind. A lot of data. Okay, perfect. So let's just clear up some of this previous TA that obviously is no longer valid. Where are we going to next, right? So we're currently building up some structure, ramping up for its next move. So let's bear that in mind. So we're going to potentially push up towards this next order block. Okay, so this next level of resistance here. This is where there's quite a lot of resistance. So yeah, we're looking at a nice push up towards these levels here once we break through now. We're well into the London Open now. As you can see, we're building up some structure. So what are we looking for? Potential flag being built here. Okay. So as you can see, so going to get a little bit of price compression, and depending on the final structure that I build. So at the moment, we're expecting a bull flag, symmetrical triangle, whatever you want to call it, kind of build up here, and then hopefully get a push up and out and into this zone here. Okay. Now, if we do get a pullback, we will look at one of these fib levels to act as support. So between 0.5 and 0.6 looks like is the most likely area of support. That's it if we get a break below. If not, then we'll just get a next impulse leg up towards this level here. So we'll be looking at taking profit at this level. Okay, so that's what we're looking at. This is your signal. I mean, Litecoin's at 77.8 roughly. So not too far from our entry. It's already hit one of our take profits. So there's still room left to get involved. So we'll leave this one running for now. As prices develop, we'll probably put out another signal on this live stream as well as the channel. So just stay tuned to it. What else can we go on? We can touch base on Ethereum, I guess. A lot more volatility on Ethereum. Okay. As you can see, just huge amounts of volume coming in on that push up higher. So we could be looking at roughly 1320 to 1340 as resistance. 200 moving average is there as well on the 4 hours, so it's going to hold a bit of strength here. But again, we're going to build up a little bit of structure before making a move up higher. Yeah, but still looking, I mean, it's very, very little volume on the 4 hour. However, it's still yet to really find some decent resistance, which is at this exact point here. Yeah, we're expecting a push up higher. Again, if we break down lower, we'll be looking at one of those fib levels to hold and then a continuation back up. Again, guys, we do have a lot of US data to come out. We've got some European CPI to come out as well today. And we've got a Jerome Powell speech later on today to come out. So, yeah, that's what we're looking at. Why don't you use an indicator? What indicator are you talking about? So the only indicator, if you're talking about, so the only indicator that we use is accumulation distribution indicator. Apart from that, we don't use anything else. It just gets too messy. We like to keep our analysis very simple. Just use what's effective and what the institutions use. So we use moving averages, obviously, price action, volume. Yeah. That's what we use. We don't use, let's say, the RSI or Bollinger Bands. We don't use any of that sort of stuff. It just gets complicated, just gets messy, and you're adding too many levels This works perfectly fine, and we basically tell anyone that just keep your analysis simple. Use what works, what's effective, and volume is a main aspect here. We use order blocks, obviously supply and demand zones, where the liquidity is at. That's what we follow. We use confluences on ways that we can track the institutions. Okay, so we do to also kind of use on-chain data. Okay, just so we can see where the big money is coming in. Again, volume is a great indicator for that. You can see it in real time. So yeah, we don't use any sort of other indicators because they're lagging indicators. They're not telling us information in real time. They're not telling us what's happening here and then. We're finding out about things after the move's already been done. Okay, so yeah, the best policy when it comes to trading, keep it nice and simple. It's the most effective way of trading, and it works. It works for us, and yeah, that's what we pass on to anyone getting started. So yeah. But yeah, guys, feel free to ask us anything on our TradingView account. We have uploaded a whole load of updates. So we got a full crypto market update on there, as well as some altcoins. So I think today we went through Chiliz, Atom, Luna, Classic, and another one. I can't remember which other one we've done. But yeah, feel free to go and touch base on there. Feel free to give us a follow. Again, we will be bringing out these updates on a daily basis, as well as these live streams. The other altcoin that we done a update on today was Carver. So yeah, touch base on them. Some really good trades on the cards here. Atom's one of them. It's already setting up some very nice structure. So yeah. We'll see kind of how things develop as we move forward and through today's trading session. So yeah, feel free to hit that like button on the live stream. That'll be very much appreciated. Get as many people joining. That'll be great. Yesterday's live stream went fantastic. Just as I mean, if you joined us at the beginning of this live stream, obviously all of our Bitcoin take profits hit, and obviously our Litecoin went into profit, still is in profit, but we're letting this one run for a bit. So let's get some news on. Just get in touch with what's happening today. Always useful. Listening to a bit of news this morning, see what's happening on that side of things. Let's get some volume. But yeah, so the move's been made. So what we're expecting is a nice compression in price, as you can see on the chart. And then hopefully we can get a nice break higher. So we'll see how things can develop. Again, it could be the case if we break down lower, we'll come to this level here and then make the next impulse leg up. If not, we'll just break straight up and make a move, make its next move. As soon as we get this break, we will be pushing up much higher on the altcoins. So bear that in mind. Let's have a little look at what the dollar index is doing. Lots of volatility on the dollar index. As you can see, we're toppling over, leaving a little bit of a gap above. But again, it's something that we stated that it will come up to this order block here and make a turnaround. So it's going to look for some liquidity down here at support levels. If not, we could get a straight move down, depending on the labour market data that we get today. So again, we do need to keep a close eye on this.
All we have to do is ask the data. So, you need to move your business online. Go to Fiverr. Get your website developed, marketed across social media, and SEO optimized, and you're set. For every step your business takes, Fiverr. Freelance services on demand.
Right, we'll give you a nice juicy trade that we've sent out. Okay. It's waves. It's setting up. We just need a continuation, but it's holding the same positive structure. So hopefully we can get a very strong break up higher. Tested this level here, held, and just continued with bullish structure. We're currently compressing in price. We kind of got a little bit of a fake out on the top side, so we could see a little bit of downside on this one before making its next move. We've got a nice order block just beneath here, as you can see. So let's see if it can hold. If it can, we should see a nice push up if we can get that break on crypto, on Bitcoin, sorry. But yeah, crazy amount of buy side volume coming into the market. So yeah, let's see how things can develop on here. Okay. Also, guys, thank you very much for the follows. Very much appreciated. We won't let you down. As we have mentioned, every single day of the week we bring out market updates. So you're always in touch with what's happening, our perspective on things. Again, we go through the whole range. News, price structure, price levels, the scenarios that can play out. Yeah, it's useful to touch base with us. So 96 years old. Zhang presided over more than a decade of dramatic economic growth, hit that like button. The bloody 1989 crackdown on pro-democracy protesters. So we're just going to listen to a bit of news now. See what's happening, what's the score for today. As we have mentioned, it's a very busy day in terms of data. So it's going to be a volatile day. Okay. China to join WTO. What will his legacy be, and how important is the timing of his death?
Well, obviously, his death is coming at a point of great upheaval in China. We've had the protests over the weekend. There's a lot of angst about COVID-0. The economy is obviously extremely weak at the moment. I think the lesson that a lot of people are going to take away from Mr. Zhang's time in power and today will be that economic growth, and Chinese leaders have said this for a long time and long championed by Jiang, but that economic growth is the way by which China can solve a lot, if not all of its problems. So Jiang was in power after Tiananmen Square, when China was in large part a pariah in the international community, sanctioned by the U.S. and Europe. Through economic growth, Jiang Zemin was able to change that story. Jiang Zemin was at the helm of the country when it had two really significant.
By the way, guys, feel free to ask us anything in the chat. Welcome. Yeah, literally ask us anything, any market, anything you wish us to do some TA on, even on anything that you want some guidance on, in terms of even anything trade related, so anything, let's say, order blocks, fibs, supply and demand zones, literally anything. Feel free to ask us. We're more than happy to go over it with you guys.
Of China economically looks like now.
Well, I mean, COVID obviously is first and foremost, and we are starting to see some pullback in the way that the government is executing on that policy. There's been a reduction in testing requirements. There have been a rollback in how many or how widely lockdowns are prosecuted. I think the leadership definitely is aware of the weekend protests, is aware of how much frustration there is out in the populace, and they are trying to do things to change. Going forward, I think for the economy, there's also the property issue, but getting more confidence in the populace, getting people willing and ready to spend, I think that will be the key to really sparking a rebound.
John, thanks so much. John Liu, Senior Executive Editor for Greater China in Beijing. Coming up, Microsoft EMEA President Ralph Haupter on the tech sector as well as supply chains. That interview is next, and this is Bloomberg.
Future Makers by Standard Chartered has supported more than 650,000 young people from low-income communities in the last 3 years, empowering them to learn, earn and grow. We're Standard Chartered and we're here for good.
You have to sleep with one eye open because it's a very competitive world in and outside of the ring.
Welcome to Bloomberg Power Players, the series that talks to some of the most influential figures in the world of sport.
You first heard yourself called a billion-dollar promoter. What did that make you think?
I had a vision and strategy that many thought wasn't achievable, but that made me work 10 times harder to get to where we wanted to get to.
Welcome to Bloomberg Power Players.
Staying the course, the Fed's Bullard says the central bank will have to maintain its plan for rate hikes as markets look ahead to Chair Powell's speech today. Hostile forces, while Chinese authorities pledge to crack down on protesters angry about the government's COVID policies, the IMF's Georgieva says it may need to cut the nation's growth forecast. And China's former president, Jiang Zemin, has died, aged 96. Jiang moved China towards the WTO and more foreign investment in a decade of rapid economic growth. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, as supply chain bottlenecks continue to impact global markets, Microsoft has launched a new platform to help organizations maximize their existing supply chain investments by using technology like AI. Now, we're joined by Microsoft President for the EMEA region, Ralph Haupter. Mr. Haupter, thank you so much for joining us. I mean, I love optimizing supply chains. It sounds a bit like mumbo jumbo. I know people love this, and actually it helps them. But what exactly is the problem you're trying to solve?
Look, I think we need to recognize these days, top of mind of all CEOs is really their supply chain and their logistics. As a global organization, that's what you have. And especially if you're companies in Europe, you understanding your supply is important. GDP impact, if you don't get it right in EMEA, maybe 2% down on growth, which is substantial. And so what we do is really helping get visibility and clarity to customers.
I mean, I'm so naive that I was expecting chief executives to already be on top of their supply chains because it seems so crucial. I mean, on Bloomberg, we talk every day about how this is their main risk. So is this providing support so that they track, emission supply chains so that they get things online quicker? Or what are the practical solutions that you can help with?
Yeah, let me help you. 1% is that what McKinsey says, most probably the number which is right, which CEOs have access to data and understand what's going on.
That's in their own companies.
In their supply chain, which is mind-boggling at this stage, right? And so what we try to help is really getting visibility and clarity. That's the reason why we have the Microsoft Supply Chain Command Center. I'll give you an example. Daimler Truck in North America, more than 20,000 people, more than 90 locations, hundreds of thousands of parts. They really try to understand how to serve their customers best. And giving them visibility on data is key. And we're not inventing new products. We're just helping on two things. Number one, whatever data they have, we consolidate and give them visibility.
Yes.
Number two, we help them predict through AI what is next best done with the data they have.
And so this could be chips. I mean, we've seen so many supply chain issues, and a lot of the things actually, and maybe them not front running it, so not knowing what they need, but also not having the actual thing. Are supply chains overall getting easier to manage?
I think we're getting a lot of interest in handling that one. And with the challenge we have on sustainability, I think these two things are coming together, where you actually solve for both by having data and visibility. And that's the mission where we have driving for clarity and give visibility. It helps on the supply chain, and it also gives you access to improve your sustainability insights as well.
I mean, I think we have someone in the newsroom who's waiting for a Tesla, and it's somewhere in the Atlantic Ocean in some cargo ship. I mean, of course, a lot of the supply chain issues also come from China because of the COVID-0. Has that been getting much more difficult to try and game theory and use AI to predict what happens?
I think understanding, obviously, the Chinese impact on a global supply is important, and that was a key driver for us to help companies improve that one for sure.
But so do you model COVID-0 policies or the opening and closing of ports?
Think about getting all data you have, existing ERP system, existing operations, your suppliers' data, your harbor data, public knowledge data, and infrastructure, all that is combined to give you great visibility, and then you make optimized decisions.
Ralph, I know you also lived for many years in China, and this seems like of course, the announcement of the death of Jiang Zemin, one of the most well-respected but also transformative leaders in China because of the openness for the markets for his country and the accession to the WTO, has died. How does this change at Crossroads, where we are seeing, of course, supply chain issues, but also, this economy trying to figure out what it wants to be?
I think these days there are multiple challenges in the economical environments, right? So energy crisis, supply chain crisis are the key ones which our CEO is addressing. And we try to be here with technology. For us, it is very important as a technology company helping in circumstances where economic is in challenge. And I think we are the unique place to help. In energy crisis, we're helping customers to optimize their energy consumptions. Going to data centers globally is customers saving up to 90% energy. And we plan to be 3 years down the road absolutely on renewable energy. That's just one. Giving technology on companies sharing with low-code stuff to really optimize their access to information is super crucial, and that keeps innovation pulling through right now. So we feel in a complicated environment where China is one, energy crisis is another one, we really are uniquely positioned to help our customers and improve their situations through insights and the clarity we give them.
How do you protect that data? Because I imagine as a chief executive, you're worried about giving too much away.
Trust is one of our core on our Microsoft platform. We have been always committed to regulatory. We have been committed to our data centers and the infrastructure to be in the markets where the regulatory is happening. And I feel proud to say that I'm unique in that way on how I respond and have availabilities on trusted environments.
Are supply chains getting easier to tackle? I mean, we're talking about record inflation around the world. We're talking about shipping prices. We're talking about insurance. We're talking about not having enough components, and maybe also the supply chains being shifted because of Ukraine.
The specific feedback I'm getting from CEOs that they feel comfortable the moment they see data. that they can act in a controlled way, and I think that's what makes the difference. So the optimism I have there that we are on a path to really see progress and capabilities come to each single organization.
But how difficult is it coming up, on the back of also 2 years of COVID? I mean, I had one chief executive who said, he had 5 minutes to decide whether a lot of things we're going to be shifted, I think, from Mauritius.
Yeah.
This is a retailer, but literally, if he didn't say now, then it would have been delayed for 3 months to actually get the shipping. Are we over the worst?
I think that's the way where we think we want to help, giving data to make these decisions easier and not being in the Russian pressure. That's, I think, the difference we offer through that capabilities we brought to market.
Every day we talk about technology companies having to lay off people because of valuations.
We'll start scanning the market in just a second.
Do you see this continuing
We've
into
already
2023?
done a bit of a scan this morning, so we've already got some in the pipeline.
So we did, and I think that's the pattern forward. We see a lot of
we're
demand
still
on the
in a couple of
innovation side,
trades
building
to go
industry-specific
long.
solutions, and you saw us investing and winning a lot of
You can see how
customers.
things kind of play
That's
out
set
on
the
them.
space through our
But
investment.
we'll look
So
at
what's it sitting
bringing
like? I mean,
in
sitting
another
on
one or two
in a
trades
big technology company,
again to
what do
go
you think the next 12 months
long.
will bring?
I think the unique insights of customers
Once we find a bit of
is the
support.
art right now. You have customers who have fantastic top line and challenge on the bottom line. That's a different approach to customers who have supply chain challenge. And just being with these customers in these challenges, I think that's the mission we have in hand, and I feel good to serve there.
Ralph, thank you so much for joining us today. Ralph Haupter there, the Microsoft president for EMEA, joining us for a robust conversation on supply chains. Now, coming up, NATO foreign ministers continue talks in Bucharest. On the agenda, the war in Ukraine and setting a price cap on Russian oil exports. We're live from the region next, and this is Bloomberg.
With the pace of change today, you need costing companies millions in revenue. Leaders have a huge opportunity to break down barriers and really achieve bigger business objectives. Asana's intuitive and intelligent work management platform can absolutely help.
At Standard Chartered, we believe that no matter how you start in life, every young person has the right to reach their full potential. We're Standard Chartered, and we're here for good.
At SAS, we love bold questions, because with the right analytics, we make data do amazing things, like make the world safer, faster, healthier, and kinder. All we have to do is ask the data. SAS.
Right, bear with us. We'll be back in just a second. Yeah, we'll just let the market roll through for a second.
Economics, finance, politics. This is Bloomberg Surveillance, early edition of Francine Lacqua here in London. Now, NATO foreign ministers are gathering for a second day in Bucharest. On the agenda is the war in Ukraine and reevaluating relationships with authoritarian regimes. On the sidelines, talks on setting a price cap on Russian oil exports continue. So let's go straight to Maria Tadeu, who's in Bucharest for the talks. Maria, are we going to have a price cap? What are the chances that we get something concrete? Yeah, Francine, there's a lot going on here because you have debates around the oil price cap. Remember, there's that December 5th deadline that is fast approaching. I spoke to the Lithuanian foreign minister, and he told me flat out, we do not like the offer of $62 a barrel. We wanted to go lower. There is still time to get a deal, but of course, the clock is ticking. Now, separate to this, a big debate on Ukraine. The Secretary General saying this war has now taken, quote, a perverse turn. The Ukrainians are facing a horrific winter because Russia has now weaponized energy and wants civilians to really suffer in really terrible temperatures. And in fact, I spoke to the Dutch foreign minister, Mr. Hofstra, and I asked him that, what about a winter war? How do you fight it? Where there'll be a special tribunal for war crimes, and where does the war in Ukraine go next? This is what he had to say. Let's take a look.
The war will continue, and therefore we need to step up our game. We need to do more in terms of helping the Ukrainian army. But equally important is the whole theme of winterization and helping the Ukrainian population that is putting up a very, very brave fight in going and getting them through these very difficult winter months.
And can I ask you the flip side to this? And of course, NATO is a military alliance, and Russia's now, it's not fighting a military war now. This is almost a civilian war. But the criticism is tomorrow is December 1st, is winter already. How is it that we're only debating about this now, especially with the power generators for Ukraine?
Yeah, the good news is that we are doing a lot. So we freed up 180 million. We are sending generators. We're doing many things as the Netherlands, and the good news is many of our friends are doing the same. But you're absolutely right. This is something we do need to sustain. And indeed, I was in Ukraine 2 weeks ago, which was the day of the most heavy shelling since the very beginning of the war. And if anything, that should motivate us to do more, helping out the army, because there's no substitute for doing well on the battlefield. But equally important, make sure that we help the civilian population through this very, very difficult phase.
And the Ukrainians, of course, continue to say this is air defense. They also talk about sending this big tanks. There's questions too around, yes, we send the tanks, but who's going to do the training? What's your thoughts on that?
Well, that is precisely what we're doing. It is, of course, military equipment, but also making sure that the people who use it are trained to a degree that they can effectively apply the things that we do deliver.
Because this is super sophisticated technology, just to make the point, because sometimes people don't really understand the connection. You can have the tank, but if you don't know how to operate it, it's not going to work.
Well, without going into the specific items that we are delivering, you see that many of the things, whether it is the howitzers, the Panzer howitzers, or this other military equipment, many of these things actually do require training. So that is something that we do provide together with our partners.
Today, it's important to combine the two because you will be talking about China. And NATO says, well, China is a systemic challenge, but also for the European Union is a big trade partner. At one point, the question is, what's more important? Is it security or trade for you?
Well, of course, I think it is good that we here see the world for what it really is, and are no longer naive about, the willingness and the ability of global powers to basically challenge the international system that we built after the Second World War. And China is one of these countries that has the desire and the ability to challenge our international system. So that is why we are talking about that here today, even though, of course, the world is very much interconnected in terms of international trade.
And that was the Dutch foreign minister speaking to us earlier. Of course, he talks about China. Today, the topic will feature heavily. And remember the words from the Secretary General himself yesterday. There are lessons from Russia to be applied to China when it comes to dealing with authoritarian regimes. Of course, we'll debate that in more detail when we speak to the Secretary General himself later on in the program. Francine. Thank you so much, Maria Tadeo there in Bucharest. Now, stay with us later today. The NATO Secretary General, Jens Stoltenberg, joins Maria. Don't miss that interview. Now, let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. OPEC Plus is said to be planning to hold this weekend's output meeting online rather than in person in Vienna. The meeting had been shaping up to be a significant set of talks, with oil having raised most of its gains for the year due to recession risks in the West and COVID unrest in China. Speculation this week has mounted that the group might cut output yet again. Lithuania's foreign minister says he thinks the European Union will reach an agreement on a Russian oil price cap. He spoke to Bloomberg on the sidelines of NATO talks in Bucharest.
I would believe that we will find a solution. I believe that we will find a solution, yes. I would not go into numbers. It's an active negotiation that we are presenting our arguments, and we're trying to convince our partners that these are the arguments that maybe others should listen to.
Meanwhile, bankrupt cryptocurrency lender BlockFi will try to collect some $618 million owned by FTX's Alameda. The company has made its first appearance in bankruptcy court, seeking routine approval to keep operating. It is also developing a plan to repay creditors owed more than $1 billion by reorganizing or finding a buyer. Amazon's cloud unit plans to add employees next year and keep building new data centers in a sign the company's broader hiring freeze has not derailed investment plans at most of its profitable businesses. Sales in Amazon's cloud unit grew 27% in the most recent quarter, though that was the slowest year-over-year growth since Amazon began breaking out the division's performance, and that was 8 years ago. And England and the USA are both through to the final 16 of the World Cup. 2 goals from Marcus Rashford saw the Three Lions beat Wales 3-0 to come top of Group B, bringing an end to the first tournament for the Welsh since 1958. 1 goal for the United States against Iran was enough to see them progress from the group stage. So they are due to meet the Netherlands on Saturday. And that's your Bloomberg's First Word News there, Francine.
Leanne, thanks so much. We did have a happy newsroom when we came in this morning. Coming up, the UK posts to relax rules that require banks to separate retail and investment banking services. That's coming up shortly, and this is Bloomberg. economics, finance, politics. This is Bloomberg Surveillance Early Edition on Francine Lachlan here in London. Now, Bloomberg has learned that the UK government is planning to relax the ring fencing of banks as part of efforts to deregulate the City of London and get a big bang out of Brexit. We've been talking to our sources, although it was first reported by the FT. Joining us now is our Bloomberg reporter, Lizzie Burden. So, Lizzie, first of all, if you remind us what ring fencing is, it's basically getting rid of some of the risky parts. Can the UK actually, have a big bang out of this?
Well, the whole point of ring fencing, as you say, was to separate the capital into different pots within a bank so that the different sections could absorb the losses separately.
We are streaming, and we're just going to be on and off. We're here all day. So, yeah, we've got obviously the news running. But, yeah. We're here all day. Obviously, we're leaving up this screen for you. We have got our Litecoin trade open from yesterday, and then obviously we're expecting for continuation in prices on Bitcoin and just the crypto market in general. Obviously, we've got a full day of data coming out today. So, yeah, it's going to be a busy day of trading.
Well, first of all, it's something of a Brexit
we'll see what happens. We are more than likely to bring out another trade on this live stream. So stick around. If you can, just leave it playing in the background. We will be on and off. Like I said, the stream runs from London open till London close. Today we might overshoot a little bit till later on, just because we've got US data to come out, which obviously comes out a little bit later here in the UK. So yeah,
where he said not only is Brexit adding to inflation, but it's also holding back growth.
Yeah, people finally talking about the consequences of Brexit, and of course Lizzie Burden did that wonderful, important, and timely interview with Michael Saunders. Thank you so much, Lizzie, for joining us on the UK. The other big story: China's former president Jiang Zemin died earlier today, succumbing to multiple health issues. He was 96. Now, Zemin took the helm immediately after Tiananmen Square crackdown in 1989, leading the country until 2002. During that period, China's economy more than tripled in size as the country moved decisively to a more globalized trade model. Well, joining us now, of course, my co-anchor in the previous hour, Tom McKenzie, many years, I think over a decade, living in China. So the importance, actually, of how he changed the markets and liberalized China is not lost on us today.
Absolutely consequential in terms of picking up the baton from Deng Xiaoping with that reform agenda, working with Zhu Rongji, who was known for being thick-skinned and pushing through consequential reforms. We were talking about this in the previous hour, the fact that Jiang Zemin welcomed in, and this was hugely consequential at the time, business leaders, CEOs into the Communist Party, a huge change there in terms of trying to bring enterprise and entrepreneurs within that system. So it was a business-friendly set of reforms that were pursued by this former leader, and I think it really stands in contrast to the China of today. You had a former leader, Jiang Zemin, who was reforming the economy and opening up to the world. Finally, of course, leading up to 2001 and the accession to the WTO, pursuing closer relations with the US. There were bumps along the way, but nonetheless reforming as well at the same time as pursuing those open relationships and growth of double digits. Very different to the China of today.
Yeah, and he really brought a reformist, almost liberal streak to China's reforms. What does that mean for China in 2022?
Yeah, you speak to the likes of Hank Paulson, for example, the former US Treasury Secretary, who was on the ground in China in the late 1990s in his role with Goldman Sachs, working with Zhu Rongji, for example, who was the premier under Jiang Zemin on some of those reforms, the liberalization, the listing of some parts of state-owned enterprises, for example. And Hank Paulson will tell you it was an incredibly vibrant time at the time. It led to a lot of inequality. There was
by the way, guys, feel free to ask us anything, any TA on any altcoin that you wish, or on any market. Any forex, whether it be forex, commodities, equities, anything, feel free. Even on any educational trading questions, more than happy to answer it for you. And so, yeah, support resistance, fibs, order blocks, Wyckoff, absolutely anything. Feel free, make yourselves at home. We're here all day long. Of course, full day of trading. So, yeah, let's get it.
also in the context of the last couple of weeks, right? And some of the crackdown on the protests.
Yeah, absolutely. As you said, Jiang Zemin came in after 1989. He never apologized for the crackdown in Tiananmen Square. He said if he didn't take those steps, and he made those comments standing alongside former President Bill Clinton. He said if China hadn't taken those steps, you wouldn't have the sustainability, the stability that has led to this huge growth that we're seeing now. Those were comments back in the 1990s. The context today, of course, the unrest in China.
Tom, thanks so much. Tom Mackenzie there, of course, with all of his insight in many years in China. Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller, K-Lines in New York, and Edwards here in London. And this is Bloomberg.
Why do we get up in the morning? We'd say, to make a mark.
Our hope is that future cities will thrive on innovation while
cooperating, I should say, with Airbus, doing some joint R&D, if you like, around chemicals and battery life, such a crucial part of the industrial space these days. The euro, I've mentioned, the pound also up by 0.5%, but really, as Matt was saying, this is a weaker dollar story. We're kind of risk on various assets. The dollar retreats, and these two go a little higher, Matt.
Yeah, let's get to what's going to be the main story of the day. Fed Chair Jerome Powell may cement expectations for a slower pace of interest rate hikes in the U.S. when he speaks at an event in Washington. Meanwhile, Bill Dudley, former New York Fed president, told Bloomberg he sees the central bank pausing rate hikes once they get
that's the next
to the 5% range.
They're stressing the longer rather than the ever
so
higher.
you're looking
So I think
like it's holding above that 100 moving average, which is very, very nice.
Sit there
So we'll
wait
see
for
how
that
things kind of play
restrictive
out on
monetary
this one.
policy
But
to
yeah,
slow the
that's
economy
looking
down,
like our next
generate more
bout
slack in the labor market,
is
and that will
Matic.
gradually push both wage inflation and services price inflation
Just
down.
going to get the signal up and
Valerie
ready.
Keitel joins us now, Bloomberg Markets reporter, to talk about what to expect from, I guess, the step-down confirmation today is what we think we're going to hear from Jerome Powell, right?
Yeah, exactly. So we know he's speaking at the Brookings Institute, Matt, which is focused on the labor market. So a lot of his comments that he might use to do that is talking specifically about the labor market. And before he goes on air, we get the updated JOLTS data. We know that this came in strong last month. We're still hovering around 2 job openings for every unemployed person in the U.S. And that's still quite a strong number, which is likely to lead to further wage inflation gains heading into next year. And look, using these things, he'll probably communicate that these strong data is underlying their commitment to tighter policy for longer. The other strong thing about the labor market is jobless claims. The 4-week average is now hovering around 225K, and we know from their SEP projections from September that the Fed really wants to see an unemployment rate around 4.4%. Jobless claims hovering that low is not consistent with inflation rising next year. So he can use these things to justify that, yes, we do intend to step down to 50, but unless we see further cracks in the labor market, our destination is not going to meaningfully retrace. They could do this in many ways in the next meeting, one of which is widely expected. They'll be revising the dot for 2023 higher. So eyes on things like that he maybe will say today, but look, this is probably the last big thing we'll hear from Powell before the blackout period, and the market is going to be watching any comments very closely.
Absolutely. Bloomberg's Valerie Keitel, thank you very much. A preview on what we can expect from Jerome Powell later. Now over to China. The former Chinese president, Jiang Zemin, has died at the age of 96. Jiang presided over more than a decade of dramatic economic growth following the bloody 1989 crackdown on pro-democracy demonstrators in Tiananmen Square. This comes in the wake of widespread protests in China over strict COVID restrictions. Rebecca Chung-Wilkins joins us now, Bloomberg Asia government and politics correspondent. Rebecca, remind us of the role that this man played in the Chinese development story.
Well, Jiang Zemin, under his watch, it really was one of the most extraordinary periods of growth for the Chinese economy. He presided over a period of openness, of economic prosperity. And of course, it was under him that China joined the WTO. He was an English speaker. He also resumed ties with the US. And when we it really is a very sort of powerful point of comparison with China's context today. When we look at the sort of extraordinary growth of the middle class, for example, under Jiang, who really encouraged businesses and entrepreneurialism, and was also a big driver
CPI,
of the growth of the real estate market.
Rebecca, as we've been speaking with you, a red headline just crossing the Bloomberg terminal that the Chinese yuan has advanced 1% versus the US dollar amid reopening hopes. That's the onshore yuan. The offshore yuan is still also stronger by about 0.8%. Interesting to see a stronger yuan even after we got weaker economic data in the form of PMIs overnight. How does
EU
the weaker
CPI,
economic data balance with the reopening story that the market has been so focused on?
Very slightly.
Yes, indeed. Well, in some ways, that economic data, some of it's the worst since April, when we saw the last record spike. We have a new record now, so it really speaks to the impact of rising COVID cases. But traders saying that actually the rising yuan is really off the back of this speculation, a lot of speculation that has to rip through markets, particularly this afternoon.
Rebecca, thanks so much for joining us. Rebecca Chung-Wilkins there, given what's going on in China and the markets. Now, Bloomberg has learned the UK government is planning to relax the ring fencing of banks as part of efforts to deregulate the City of London and try to get a big bang out of Brexit. Joining us now is Bloomberg's Lizzie Burden. And Lizzie, I feel like we just established ring fencing, right, after the great financial crisis. So we're done with it already.
Yeah, it was only implemented, Matt, in 2019, but it's been complained about a lot since, that the rules are overly rigid. And the argument really is that this government isn't doing enough to boost growth. And I would also point out that it's something of a misnomer to talk about a Brexit big bang when it comes to ring fencing, when the EU rules don't require the UK to go as far as it has done on ring fencing.
Yeah, and indeed it was a bit of a UK specific policy, wasn't it? It was only the UK. It wasn't really a lot of other places that were doing it. We'll see how that one develops. So this is the search for some kind of Brexit dividend then, isn't it, Lizzie? Speaking of Brexit and the impact it's having on the real economy, the Bank of England's Hugh Pill has been giving his thoughts.
Yes, unusually frank from the chief economist of the Bank of England. Hugh Pill saying that the end of free movement of labour is contributing to the inflexibility in the UK labour market, which is contributing to the inflation problem in the UK. He says that we have the worst possible worlds. We've got the energy problems of Europe and the labour market tightness of the US. But really echoing what Michael Saunders, former Bank of England policymaker, said to us. And he went a step further. He said that Brexit is not only adding to inflation, but it's holding back growth via the labour market. So interesting to hear these comments from Hugh Pill.
Absolutely. All right, Lizzie Burden, our UK reporter, thank you so much. Now let's get back to the US equity market and take a look at some stocks moving in pre-market trading here in the U.S. One of them plunging lower is CrowdStrike. This is a cybersecurity company, reported earnings after the bell yesterday. Its recurring revenue, net annual recurring revenue, coming up short of forecast, as did its revenue forecast for the current period. Analysts saying that macro headwinds are starting to catch up to this company, and that stock down about 20% in early hours as a result. It's also a big drop for NetApp. This is a data management company. It too disappointed, cutting its revenue forecast, so it is down about 14%. But one more positive story out there is Horizon Therapeutics. It confirmed overnight that it has received, it is in preliminary talks with Amgen and Johnson & Johnson and Sanofi about a possible takeover of the company. Analysts estimate that the price ultimately in a deal like that could be between $110 and $135 a share. This morning in early hours, it's trading just shy of $104, but that is up 32% before the bell, Anna.
Kaylee, big moves there. Let's get some breaking news across the Bloomberg. This is to do with Hungary and the distribution of the Pandemic Recovery Fund around the European Union. You may remember there'd been a standoff between Hungary and the EU around the rule of law. Many in the EU and in Brussels worried about whether there really was the rule of law being rightfully applied in Hungary. Well, now we have sources telling Bloomberg that Hungary will get the EU's approval for 5.8 billion euros of this recovery plan, but that the EU will also recommend withholding separate
see if we can get a break. Everything's moving very, very nicely.
Live from the Native Foreign Ministers meeting in Bucharest. We will have an interview with
we have obviously just received that European CPI reading.
And what are markets expecting ahead of Jerome Powell's speech later today? We'll speak with Elliot.
CPI year on year, 5% came in as forecasted and as previous. CPI month on month, minus 0.1. So a slight decline there. Year-on-year declined by 0.6%. So again, a little bit of a cool off there. We should be looking at the dollar index making a turnaround to the downside, putting some upward pressure on crypto. So hopefully we can get a break and push up higher. Just remember, we've got obviously the Bitcoin trade going on. Take profit 1, 2, 3. Here are the price levels just on the right hand side. We've got our Litecoin trade open since yesterday. TP1's already hit, and this is our brand new trade of today, the Matic trade. So we'll see how these develop. So stay tuned for any updates on all of the price action today, guys.
This Friday, all eyes are on the Jobs Report.
Jobs Report Friday is going to be huge. It's the final stretch of 2022.
Is there actually going to be some change in the tone?
Wage data might be more important than the CPI.
This Friday, Tom, John, Lisa, and Mike will bring you crucial data and expert analysis at terminal speed.
The labor market is stronger than people have thought it would be. The recession is not here yet, but the check is certainly in the mail.
We're going into a downturn at full employment.
The November Jobs Report, Friday on Bloomberg Television and Radio.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Matt Miller in New York and Anna Edwards in London. Now keeping you up to date with news from around the world, here's the first word. The U.S. Senate has passed a bill that enshrines federal protection for same-sex marriages. The vote was 61 to 36, with 12 Republicans joining the Democratic Party. Democrats had raised concerns that the Supreme Court could overturn a ruling that established the right to same-sex marriage. The measure now goes to the House, where the final passage is expected. And elsewhere in Washington, the leader of the right-wing Oath Keepers group, Stuart Rhodes, has been convicted of seditious conspiracy for his role in the storming of the U.S. Capitol in 2021. One other defendant was convicted of the same charge. It's the first trial of the most serious charge from the riot. The return of Disney CEO Bob Iger may not be cheap. In a filing, the world's largest entertainment company warned investors that changes in management and strategy being contemplated by the new leader, or new old leader, could result in impairment charges. Last week, Iger said in a memo he's considering changes in Disney's management structure. It's one of the few corners of Sam Bankman-Fried's crypto empire that remains solvent. Bloomberg has learned that LedgerX will make $175 million available for use in FTX's bankruptcy proceedings. That would provide a fresh pool of money that could be made available to investors scrambling to recoup losses, Matt.
All right. Let's get back right now, though, to the NATO foreign ministers meeting in Bucharest. Bloomberg's Maria Tadeo is there, and she's got an interview with the Czech foreign minister. Maria, take it away.
Yes, Matt, and we continue here at day 2 of NATO, and I'm happy to say I'm joined now by the Czech Foreign Minister, Mr. Lipavsky. Of course, your country is holding the rotating presidency of the European Union on top of that. And the obvious question today, we heard from the Secretary General, the war in Ukraine is changing. This is not just a military war. This is now an energy war. It's a winter war. Vladimir Putin wants Ukrainians to freeze this winter. Now, my question is, tomorrow is December 1st. Why are we only just debating in this now? We knew he was going to go after the infrastructure. We know it gets cold in Ukraine. Why is it only now that NATO focuses on this?
So the Putin's energy war on Europe has started 1 year ago when he manipulated the energy market with gas. I think we all witnessed his ups and downs and extraordinary events which happened to Nord Stream 1 and 2. And we are now in a situation where the just now. We knew this may come, and of course our reaction is quite fast, and every NATO member country and any EU country is doing a lot on the scale of humanitarian action in regard to Ukraine.
But yesterday, though, the Ukrainian foreign minister, Mr. Kuleba, he said, we are grateful, of course, to allies and friends, especially in Eastern Europe. But the kind words are not going to do
right, we'll let these trades run. Just got to go and sort some other stuff out. We will be back with you shortly. So just let the trades run. Let's see where it takes us.
For a comprehensive package of non-lethal help for Ukraine, which will be very important for the army, but also civilians to went through this harsh winter. Definitely we cannot allow Putin to use winter as a weapon. That's something which is unthinkable, and there's a strong resolution of all NATO countries that will help to Ukraine.
When you have people freezing to death in 2022 in the heart of Europe, you say that's terrorism. Would you also say it's genocide?
Please don't push me into corners. I think even my Czech parliament clearly said that this is a way of terrorism, and these practices, when they, even on TV, the propaganda speaks about destruction of Ukraine nation, definitely we could be even using words such like that, but you know.
And you mentioned the Russian propaganda. A lot of the narrative now that they say is the more weapons you send to Ukraine, the more you help them, the more this is going to escalate. And it's either Russia wins or it's World War III. Is that bluff? And should NATO call it out?
I wouldn't spin it out of the reality. The reality is that Ukraine wants to fight for their freedom, for the values to which the West adheres, and it is not only our moral responsibility, but in terms of Czechia, it is a very practical thing that Russia will be stopped in Ukraine and that the imperialistic ambition won't continue.
You believe he has imperialistic ambitions?
They are screaming all around the occupation of Moldova and Baltics. You know, we lived 40 years under the Soviet umbrella. This was the Moscow rule. So definitely we don't want to spread this kind of old-fashioned 19th century colonialism anymore.
And of course, in Eastern Europe, the message is clear: we want nothing to do with Russia. We're never going back to that. But that on the next question, we talk about Eastern Europe, a special history with Russia, complicated, difficult. You just said it. We don't want to be in this umbrella anymore, and that's
not complicated. Yeah. They just wanted to rule over us, and we don't want to be part of the imperialistic dream. It's not complicated.
And you make that very clear. But I wonder, with your Western European, perhaps partners, countries, are you fully united? Do they perceive Russia as the same type of threat?
Yes, and the unity is something which sounds all the time, speaking the EU, speaking NATO here. We always mention unity, and we work very hard to achieve unity. It's not easy. Of course, we have a lot of debates, there are differences, but at the end of the day, we are able to achieve unity, and that's what makes us stronger.
And that's what some say Vladimir Putin miscalculated in this whole thing, that he was not expecting that Europe would come up with sanctions the way it did, that you're going to have a response from NATO, from the West, and so on. But just to take it forward, this final question. Today, you're going to be talking about China. Are there lessons, perhaps, to take from the situation with Russia, this idea that trade and security almost became one, that could be applied to China in the future?
Vladimir Putin definitely miscalculated. The whole war is miscalculation. Maybe internally it makes sense, but Russian leadership needs to be accountable for the fact of this aggression against Ukraine. And the lesson for China is that we need to be resilient, that our economies need to be resilient, and that was the main theme of today's debate. And we also are looking very actively for unity on that. The debate, it's much more diverse. You know that there's a lot of interest in that, but the fact that we are having this discussion, it's a development. 2 years ago, this discussion was definitely not here in NATO quite yet.
And sir, just very briefly, as the voice, of course, of the Czech Republic in this context, when you have the rotating presidency of the European Union, do you still believe, as you did before, Ukraine will win this war? And that means everything. And it includes Crimea too. There will be full victory for Ukraine.
Ukraine will win this war.
No questions.
Ukraine will win this war.
Well, sir, thank you so much. I appreciate your time and, of course,
you.
very direct, frank answers. Thank you so much.
Thank you very much.
And that was, of course, Foreign Minister of the Czech Republic in this meeting at NATO that continues with some very direct answers. You heard it from here. Ukraine, in his view, will win the war.
Yes, and saying that the Russian leadership must be accountable for that war. Maria, thank you very much. Bloomberg's Maria Tadeo in Bucharest. We'll be looking forward to hearing Maria's interview with the NATO Secretary General. Jens Stoltenberg will be giving us his thoughts a little bit later on today. What kind of change, if any, in the defence provision being provided to Ukraine can we expect to see from NATO leaders? Coming up, we'll get back to the market conversation. Elliot Hentoff joins us, head of macro policy research at State Street Global Advisors. We're looking ahead to Powell's speech. A lot of labour market data to hit this week. We'll get a good assessment of the labour market data. What difference does that make to Jerome Powell? He'll be speaking perhaps on that subject more than others. What guidance will he give us about a step down in December and the terminal rate? All these questions key to investors right now as we head towards the end of the year. This is Bloomberg.
When you think about the building blocks of the Cognitive City, data is really core. You get to decide which applications you want to use and what data you want to provide. It is built fundamentally around you. A smart city focuses on real-time information. A cognitive city already knows that real-time is too late. It's about how do we take friction out of your life. If we can find a place in the world where you can be the best of you, that's what fuels me.
At SAS, we love bold questions because with the right analytics, we make data do amazing things like make the world safer, faster, healthier, and kinder. All we have to do is ask the data. SAS. You will put a woman on Mars. You will be the first chief crypto officer because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. The investors are waiting for a signal from Jerome Powell. The Fed chair may cement expectations for a slower pace of interest rate hikes in a speech due later today. China sends a warning to protesters angry about COVID restrictions. Beijing is vowing to crack down on what it calls hostile forces and their sabotage. And it's the Brexit Big Bang. The UK plans to relax the ring fencing of banks as it seeks to deregulate the financial industry. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. And Matt, we see modest gains for US futures. European equity markets actually doing okay. Not a great deal of new catalyst. Another day perhaps where we go higher on the expectations and hopes of what happens in China.
Yeah, and of course, hopes about what we're going to hear from Jay Powell, right? The market, you would have thought, has already priced in this step down, given how much we've heard about it from other Fed speakers, but we want to hear it cemented today, and as a result, you may see lower volume traders sitting on their hands until they hear the speech in the Q&A. S&P futures up modestly, as you say, 0.2%. It should be noted that we haven't finished a day in the green since last Wednesday. So we've had a little bit of a losing streak, very small because Thanksgiving was no trading, of course. Nonetheless, we're back down below 4,000. The 10-year yield coming off a little bit, so that gives a little bit of a boost to equities, a little bit of a tailwind there with a reduction in a competitive yield to stocks, and NYMEX crude rising right now, 79.81. Really interesting to see this volatility up and down around the last few days. It was at 73 at the beginning of trade on Monday, and now we're back up to almost $80 a barrel for West Texas Intermediate. Then finally, Bitcoin right now up about 2.6%. There's not a lot of news. We are also awaiting testimony on Capitol Hill to start to unravel what happened at FTX. But Binance made a small acquisition buying a Japanese exchange. So maybe things are getting back to business as usual in some senses as we wait for other shoes to drop in the form of Genesis and Gemini. Kaylee, what do you see in the pre-market movers?
Well, I'm continuing to watch some of those Chinese ADRs here in the U.S., Matt, because they have seen a really sizable rally in the month of November, and it looks like it is continuing this morning. JD.com up 5.5%, Alibaba up about 3% in pre-market trading. JD up more than 42% so far in November, could add even further to those gains today, and already it's the best month this stock has ever seen on record. Another stock moving sharply to the upside is Horizon Therapeutics on potential takeover deal. They're in preliminary talks with Amgen, Johnson & Johnson, and Sanofi, so that stock is up 33% before the bell, but plunging to the downside is CrowdStrike. Disappointed in the quarter just reported. Its forecast also disappointing, so as a result, that stock dropping 20% before the bell, Anna.
Yeah, some sizable movers there. More modest moves perhaps for many of these stocks here in Europe, but overall actually making some decent gains without a great deal of narrative behind today's moves on equities. So we've got the European stock 600 up by 0.7%. Nearly all sectors in Europe are in positive territory. That's been the case for much of this morning. The energy sector doing pretty well. We've got Brent crude up another 2%, but that's only down at 84.73. Such a lot of volatility in oil prices over recent days as we work our way towards the OPEC Plus meeting at the end of this week. This is the FX market for you right now. We've got 103.66 on the euro, 120 on the pound, both of those stronger against the US dollar. Really, it's a story of risk on today, and with dollar weakness, that then means some strength coming through on these currencies. On the euro, we've heard about the Eurozone inflation print, and actually it came in weaker than anticipated at 10%, still historically really high inflation, still double digit, but it's less than the 10.4%, Kaylee, that the market had anticipated.
All right, Anna, well, on the subject of inflation, of course, we're all awaiting Chairman Powell's commentary on inflation and the labor market and the trajectory for monetary policy later today. So joining us now to discuss is Elliot Hentov, head of macro policy research at State Street Global Advisors, who's joining us from Munich this morning. Elliot, what are you looking for from the chairman today?
Well, I'm looking for a nice circus act, the delicate balance, which is basically Powell does not want to loosen financial conditions further. They've already loosened. We're back to where we were at the early summer, so that's run counter to what the Fed wants. But at the same time, peak inflation is behind us, and he does want to kind of decelerate the hiking cycle from here on out. So it's a delicate balance. You do not want to encourage animal spirits. At the same time, you do want to guide markets to where things are going. So I think if he confirms basically the 50 basis points, de facto that's a dovish statement because the market has priced a few basis points more than that. at this stage. So I feel like he's in a tough job. My hunch is he'll try to sound more hawkish than his actual message. So tone will be hawkish, but he'll probably try to guide the market down.
Okay, so it's a delicate balance. Good morning to you, Elliot. But if investors do have expectations of that step down and of that pivot, and then they think that stocks will rally further on that theme, you think some of those hopes for stocks are misplaced or just coming too early?
Coming too early. I hate it when people say this time is different, and I just don't buy it. There's never been a bear market that ends before the recession starts. That just has never happened. There's never been a case where the Fed funds rate, the Fed stops hiking before the Fed funds rate exceeds CPI reads. We're still several months away from both of those. So I understand the playbook. The playbook's the right one. We've seen kind of the dollar come off of its highs. We've seen equities rally. It's just too early. I understand there's a lot of seasonal money driving this. Patterns that play out towards pre-Christmas, but I'm simply not of the belief that we have actually hit the bottom and this is actually the turning point. It's coming, but it's coming next year, not now.
Okay, so you say there's never been a bear market that ends before recession starts. So you think stocks are getting ahead of themselves, the dollar bears maybe then getting ahead of themselves, Elliot. How much resilience do you think there is in the dollar then, and when does it turn? When does it start to weaken?
Well, obviously, we've seen cracks. Again, I think what we've seen the last month is exactly how the story will unfold at some point next year, which is that you see the initial normalization of ex-US. You see yield differentials narrow. You see growth outlooks come narrow with the US. You see kind of a normalization. But that must assume China has already reopened, and it must assume that we in Europe have confidence how the winter has played out, how the war has played out, to what degree Europe has the full magnitude of the energy shock. All of that, these certainties have to come through. The market cannot anticipate all of that at this stage. It cannot anticipate two turns in the story. It can anticipate one, not two.
But then why do we see such continued dollar weakness? I mean, it seems like we've really seen a turning point here, Elliot.
Well, I mean, some of the European data has been better than expected, so that's clearly an indication. Inflation data today in Europe again looks a little bit softer, so that's all good news. We've had a month of kind of higher hopes for more imminent reopening in China, the end of the zero COVID, so that we've had the seeds, the kernels of the turn are there too. And of course, we're getting closer to the terminal rate in the U.S. I mean, we're getting closer to peak Fed, of which we'll hear a little bit more later today. And so the seeds are there. It's just I do not think this is really the turning point.
Do you think we've seen the peak in treasuries? I mean, 421, I think, was what we hit about a month ago on the U.S. 10-year. Are we going back?
Yeah, look, on the 10-year, that's a different story. We thought at 4% that already looked like a pretty attractive entry point. If you're looking beyond the economic cycle over the coming year, then treasuries in the 3.5 to 4s seems like an appropriate range bounds area to be in. So indeed, on that point, I think duration already looks quite attractive at this stage.
Elliot, it seems both in the bond market and the stock market, the focus has been so firmly on just the monetary policy outlook for so long. We are just coming off a conversation with the Czech foreign minister talking about the war in Ukraine, which is still ongoing. Is the market underappreciating ongoing geopolitical risks?
Now, on that one, I'm with the market. I actually think, look, we've had kind of the worst case materialize. We've had kind of the full energy shock hit Europe, and it'll still ripple through over the coming year and a half as we speak. But in terms of additional negative impulses, yes, when the Russians hit Ukrainian infrastructure, that's basically a fiscal cost that's going to accrue to Europe and the U.S. The reconstruction costs, all of that is adding up, and so it's marginal at this stage. There's been the bulk of the pain has been through the energy trade. So all that is marginal. So you can almost discount it from a market perspective. The probabilities also suggest that we're more likely to see some type of stabilization next year, whether it's a willing one, whether it's just attrition. So I'm with the market on that.
You're with the market on that one. Elliot, it is almost December, so I think I'm almost justified in asking you what you're looking ahead to in 2023. What's the big theme for the start of the year for you?
Well, I think it's basically the playbook we saw now, but to wonder when does that actually take effect. I think the big question is not only where the Fed, what's the terminal rate, but for how long does that terminal rate stay in place? You see markets right now forecasting the first cuts by the end of the next year. And I think that's reasonable. If you look back in history, on average, it's 8 months between the last hike and the first cut. So if you think around February, March as the last hike, then yes, by September, October, you see the first cut. So I think getting that one right is absolutely critical.
Elliot, thanks so much for joining us. Elliot Hentoff of State Street Global Advisors, bringing us his thoughts this morning as we wait for Jerome Powell, who will speak a little bit later on today. Coming up on the program, we'll get into the advertising market. We'll talk Twitter, Apple, Disney, and advertising with the Mountain CEO, Mark Douglas. This is Bloomberg.
Why do we get up in the morning? Is it because we want to go somewhere, be someone, or beat someone? Is it to put capital where it counts, to make a change, or simply to make our kids proud? If you asked us, we'd say to pass on what matters.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kaylee Lyons here in New York. Anna Edwards with us out of London. Now, billionaire Elon Musk is publicly attacking Apple in a battle that pits the owner of Twitter against one of the company's top advertisers. Musk says that Apple has cut its Twitter advertising and threatened to block the social network from its App Store. Mark Douglas is president and CEO of Mountain. It's an advertising software company, and he is generally an expert on the media. So we bring him in on this and a few other topics. Mark, let me start with Apple and Twitter because it's such a fascinating feud. Can Twitter survive if it's not in the Apple App Store?
No. So I think there's another question. Can Apple survive if it were to use its power to basically cancel Twitter? So I don't think this is all just Apple. This is a major company in terms of Twitter with a major CEO. So I think Apple is not in a position to just unilaterally just cancel apps because of what amounts to their personal opinion about the company.
Do they have to continue demanding that Twitter and other businesses in the App Store use the Apple payment system. I mean, the threat is that Elon Musk, famous, of course, for making his money first at PayPal, starts his own payment system in Twitter and then tries to circumvent the 30% gate fee that Apple charges companies to be in the App Store.
Well, I mean, there's two things at work here, right? Because if you use Spotify and you subscribe to Spotify, you don't do it through the app. It's actually a very weird process. You have to actually go to Spotify's website to buy the subscription. So Spotify is going around the 30% fee. So that's one issue. Twitter, could do something similar, and whether that's fair or not, can be debated. The other issue in terms of canceling the Twitter app, I don't think that has anything to do with fees. That's to do with Apple's opinion about Twitter and their policies relative to free speech. So these are two separate issues being mixed together, and I think it's an interesting debate.
It is an interesting debate. Mark, good morning to you. And interesting you bring up that precedent then set by Spotify to go around the fees. Thinking about reasons that Twitter is topical right now, one of them is, of course, the new management and the way it's changed. In the views of some people, it's changed beyond recognition and it's now wild and wasn't before. And other people say, no, it hasn't really, or it has changed and it's way better. There's so many views out there on Twitter. Are businesses that are thinking about where they should advertise, are they coming to you with concerns about the platform, or is it just not something advertisers are thinking about?
No, I think in Twitter's case, they're thinking about it. And really, that somewhat predates Musk at Twitter, right? Because Twitter's business, if you look at companies like Meta and Google, they survive any storm when it comes to advertising because they're all direct response advertising. Companies are relying on them to drive their own revenue. Twitter doesn't have that. Twitter is more of a brand advertising platform. It's more discretionary spending, and it puts Twitter in a really vulnerable position where advertisers can just say, this is a risk to my brand and I don't want to be near it. If they were driving revenue for those brands wouldn't be pulling back at all.
That's interesting. So what is the risk to revenue of being surrounded by content that you're not happy or comfortable with? I ask this because in the United States, there are certain politicians who want to rein in the power of certain big tech social media platforms. Here in the UK, we see the launch of the UK Online Safety Bill yesterday, which is supposed to do something similar. And online platforms have said, well, if it drives down engagement, we make less money out of it. And that's been the resistance. What do advertisers feel through that?
Well, like I said, I think the largest advertisers, their primary concern is always what they refer to as brand safety. How does this reflect on my brand? And so anytime there's any controversy, they're generally going to run away.
So they're pretty risk averse.
The largest brands, from mid-sized brands, emerging brands, smaller companies, they are relying on these companies in order to get in front of consumers and make consumers aware of their products. They don't have that luxury. They're all in on trying to basically drive revenue. And that's why Google and Meta and maybe even TikTok now, that's why, they have all this user-generated content, but they never seem to really suffer any backlash no matter what happens on their platform. So Twitter needs to get into that space, and then they'll be immune from these kind of concerns also, but they're just not there yet.
Well, but Mark, for advertisers, I would imagine now it's not just the decision about where your content is placed in the media world, but it's also just how much money you want to spend on marketing, period, given the softer macro environment. We've heard companies, including Meta, warning about a slowdown in ad spending. So what are you seeing real time?
Well, this summer, I think, was really, really soft in the ad business. I think it's, this is now the holidays, it's Christmas and those kind of holidays in the U.S., Thanksgiving, and I think advertisers just, they have to spend in order to basically drive the revenue that they want for Q4. So I think Q4 is going to be a lot stronger in the ad business than maybe a lot of people think. I think Q1 remains to be seen. It's probably going to be somewhere in the middle where, companies come off of the holiday season, but they still want to keep growing. So it's, we'll see how that develops.
And back to kind of the location of ad placement, we talk a lot about ad placements on the internet, on apps and social media networks, but there's also the streaming factor as well. This is something that Roku has warned about, for example. It's a consideration for Disney with Bob Iger back at the helm. How are you looking at the streaming world?
Well, in terms of you have streaming and you have linear. So linear, you're losing in the U.S. 1 million households a month. You know, that's a city like the size of Miami per month. You're losing out of linear television, but all those viewers are going to streaming. They're watching more television than ever. I think Bob was quoted literally like 2 days ago saying that, you know, traditional TV, linear TV, is going to continue to decline, but I think television overall is increasing. One thing that people forget, I mean, people watch TV 3 hours a day on average. They use social media less than an hour. So TV is the number one place where you're going to find consumers, and it's a huge business.
I don't know if you've seen the story of the Knives Out sequel, but I think it's interesting that Netflix is now putting that as its first movie in theaters before it can be streamed, right? I can't stream it on my Netflix at home. I had to go out to a theater, which, I mean, arguably is even more enjoyable, but interesting. And I don't think they made as much money as they could. I didn't even know there was a sequel. Have they left money on the table? What do you think about the move?
Well, Netflix likes to win awards. It's great for the Netflix brand. So, I mean, they put in the theaters, I think, for 2 weeks, so they're eligible for an Academy Award, which maybe makes you want to watch it even more when it's streamed actually on Netflix. So, I mean, it's a game they're playing in order to feed into the award season. But I think their business model is all about getting subscriptions and now all about getting advertisers, and that's the core of what they're doing.
All right, Mark, thanks so much for joining us. Appreciate your time. Thanks for dropping by the studio while you're in London. Mark Douglas, President and CEO of Mountain, talking to us about the media. Coming up later today, we're going to talk about cars, sports cars, off-road sports cars. Lamborghini CEO Stefan Winkelmann joins us at 10:30 a.m. New York time, 3:30 p.m. in London to talk about the new off-road Huracan. This is Bloomberg.
Our hope is that future cities will thrive on innovation while enabling people to live in harmony with the environment. Technology must be applied thoughtfully to solve critical challenges across mobility, logistics, and energy.
That's why we're developing robots that are smart, agile, and perceptive. What Hyundai is doing will make our cities smarter and our lives more convenient.
Why do we get up in the morning? We'd say, to make a mark.
Out of snacks? Get Doritos in minute.
You've got it, get here.
Surveillance Early Edition. I'm Kaylee Lyons with Matt Miller in New York and Anna Edwards in London. Now let's take a quick look at what is coming up for the rest of today. NATO foreign ministers will be continuing to meet in Bucharest. Ukraine, of course, is urging the group to speed up on decisions